All right, we have more changes unfolding in the U.S. housing market and possibly very soon for new home buyers. Changes that have months' supply changing sharply, the key metric to measure how much inventory exists in the residential real estate market. Well, things have changed, all right? The floor has shifted, which you're going to see in a minute as BofA Global Research just published a note yesterday, a note that's short and sweet that spells out what they believe we're going to see in early 2024. So we're going to look at what they said, why they believe home prices are going to start falling soon, where home prices are right now using the interactive maps, and where they could end up, again, according to BofA. So if you're a home buyer or home seller, you're going to want to pay attention. But before we get started, press the like button and consider subscribing. It helps the channel out, and I appreciate your support. Also, a lot of you who use SnapForce Real Estate Insights had let us know that the Redfin maps and their data sets weren't updating with the newest numbers last week. Well, we got that resolved. There was this issue with the API pull only for Redfin, but that's now fixed. So home prices, folks, after 19 months of the Fed's tightening campaign, raising the overnight rate over 500 basis points, the quickest hiking campaign ever, by the way, along with their QT, quantitative tightening, where they burn 15 to 20 billion per month in mortgages off their balance sheet. And along with that, something else that they did late last year in September 2022 that I'm not sure that many people even realize is that they quit backstopping the mortgage market altogether. If you're not aware, the Fed stopped buying government-backed mortgages last year, leaving the MBS market flooded with supply. Mortgages just floating out there in the market right now, something that big money investors haven't been able to absorb like the Fed probably thought that they could. A big part of the reason that we saw 8% mortgage rates last month. Look, we entered 2022 with 3% rates, right? 3% mortgage rates. We're now close to 8%. The mortgage market is all about supply and demand, where there aren't enough investors to buy our mortgages. Lenders, what they do is they need to increase the risk premium on the loan, making it more attractive to investors. Well, that process went into overdrive the last few months, and thanks to that, the 7.5% plus mortgage rates are now taking their toll on the housing market. Home sales, for example, evaporated. Buyers gone, all right? The demand is gone, which we can see here. New home sales just hit one of their lowest levels on record. We're now back to where we were during the worst days of the great financial crisis, thanks in large part to home sellers who've yet to come to terms with what's happening. They're refusing, as of yet, to ask a reasonable price, to lower their asking price accordingly. We've begun to see price cuts, yes, but not enough, not even close to enough. But that seems to be changing, at least according to what BofA says is about to happen. Check this out. In this new note that they published on November 28th, they write this. Listen to what they said. One of the more interesting battles in the housing market has been the tug of war between inventories, new and existing homes for sale, and mortgage rates. Higher mortgage rates tend to reduce home prices, while low inventories tend to boost them, all else equal. Throughout much of 2022 and 23, low inventories were winning the battle as the median home price for new single-family homes held steady, even as the 30-year fixed-rate mortgage rose from little over 3% in early 2022 to 8% recently. They go on and say this. That said, there are nascent signs that the tug of war is shifting in the direction of higher mortgage rates, beginning to push new home prices lower, along with the release of October new home sales, falling to 679,000 in September. With that came news that the median price for a new single-family home fell 3.3% month over month and 17.6% year over year, which you can see here. This data is from the US Census Bureau. The median sale price for a new home has crashed, folks, now down 17% year over year, not peak to trough, year over year. In one single year, October 2022 to October 2023, prices fell 17.6%. Now, that's only for new homes, all right? That's the sale price for new homes, not the list price, nor is it the median home value of your neighborhood. If you go on Zillow, for example, you'll still see that their estimates are little change from last year, and that's because home values nationally are flat for the most part. But what matters is the sale price, folks. The sellers who are actually able to close the deal, in this case builders, are realizing the true value of their home, and it's 17.6% less than where it was last year. Now, listen to this. Here's what BofA says they believe could begin happening over the next few months. They write this. Inventories of new homes have been edging higher, and at a seasonally adjusted 439,000 in October are now near 2022 highs. The same is true for existing homes, where month's supply of inventory now stands at 3.6 months, highest reading since June 2020. And just real quick, before we read the good part, I wrote about this on Twitter last week, how month's supply is now at 3.6 months. In October of 2019, it was 3.9. And it looks like inventory is going to continue rising throughout the winter, like it does every year, which means we may see inventory reach pre-pandemic levels in the coming months. Now, back to BofA's forecast. Here's what they say. Listen to this. Looking ahead, should higher mortgage rates continue to dampen home demand and keep existing fixed-rate mortgage holders in place, then inventories may exert less upward pressure on home prices, opening the door to further price declines. We don't want to overplay the argument. Inventories of existing homes still at 1.05 million are still near all-time historic lows, and home builders remain wary of becoming overextended. But in our view, inventories of new and existing homes are unlikely to move much lower. If so, we would not be surprised to see median home prices under pressure in coming months until a Fed easing cycle becomes clearer and mortgage rates decline further. And like we looked at a few minutes ago with the median sale price for new homes crashing by 17.6%, these are new homes, right? Which is good because home builders are usually the first to set market pricing. And we can also piggyback on this and visualize it on our interactive maps. Here's Redfin's newest data set by county. This is showing sale prices, right, for all homes, peak to trough. Dark red means the county's down double digits. Blue means it's positive, that the median sold price increased for that county. Realize there's a reason I don't usually show sale prices on these maps, though, during these videos, because there's like so many small counties with only a handful of sales each month, so it may show drastic jumps. Unlike when you look at home values, for example, you could see the difference compared to the home value map here showing home values, is much more useful when looking at pricing on maps. It gives, a better picture of what's really happening. But since we're talking about sale prices, it's worth looking at. There's also, by the way, a cool thing about the sale price data sets. They include the month's supply and homes sold numbers, which spells out exactly what's happening. For example, the dark red counties all have one thing in common, all right? Month's supply. Most of them have well over 3 months supply of homes for sale. Mendocino, California, for example, has 6.5 months supply, and the median sale price has crashed since last year, now down 20%. If we go up north, Del Norte County, 6.1 months supply, and sale price now down 29%. Those are like smaller counties though, right? Take Austin, Texas. Travis County, median sale price now down 14.5% from its peak last year. Currently 5,300 active listings according to Redfin, which is 5.7 months supply. 5.7 months, folks. Nationally, like we said a minute ago, the US housing market has 3.6 months supply right now. Back in October 2019, it was 3.9. Anything over 4, and you'll notice one thing, prices start crashing. Let's look at another market. How about Denver, Colorado? And just by the way, if you want access to the system yourself, I put the link to SnapForce in the description of the video. All right, Denver, Colorado, 733 homes sold last month, and the median sale price of those 733 homes was $570,000, down 9% from peak. Still 30% over pre-pandemic prices, though. Median sale price here in October 2019 was $440,000, but again, there's only 2.7 months supply here, and prices are still down. So imagine what this would look like if there were 5 months supply. How about Arizona? We had some requests last video for Pinal County. It's part of the Phoenix Metro, Maricopa as well, but let's look at Pinal County first. The median sale price for the 652 homes that were sold here last month was $362,000. That means prices are now down 12.6% here. That's with 3.8 months supply on the market and still 55% over October 2019 median sale price. If we go next door to Maricopa County, which is where Phoenix is actually located, you can see inventory has been falling recently. Only 3.2 months supply currently and 4,000 homes sold last month. The median sale price of those 4,000 homes was $473,000. That means Maricopa County, the Phoenix market, is only down 5.4% from peak, still 59% over October 2019 prices though. But take a look at Louisiana. For example, Cato Parish, median sale price now down 12.5%, still 35% over pre-pandemic prices though. And even if we jump back over to the home value map, so now we're looking at home values, right? Not sale prices, actual home values. Look at Louisiana. Prices are legitimately falling. Look as I hover down these counties, down 16%, 12%, 5%, 11.9%, 8%. What is this area? This is Calcasieu Parish. My fault if I'm pronouncing that wrong. It's in the Lake Charles Metro. Over 1,000 active listings here, now down almost 8%. And look at the month over month. Home values have been falling in this parish consistently. Look, it's all about inventory, all right? If the Fed gets their wish of a softer labor market, if they see unemployment start rising, which is exactly what's happening right now, months supply should reach pre-2020 levels quickly. And I hear realtors all the time say that inventory won't return to those levels. Yeah, I completely disagree with that. All right, if you enjoyed this video, got something out of it, press the like button. If you didn't, that's all right too. Either way, I appreciate you watching.